All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today's April 28th, 2025. And the top story this morning, Europe is plunging into darkness. Not metaphorically speaking, we are talking more in a literal sense. We have a massive power outage. Started in Portugal. Took the whole country down, or pretty much the whole country of Portugal went down. Then it took down large swaths of Spain and even parts of France are without power now. It's a pretty huge blackout. Now, nobody knows what caused it. They're not ruling anything out. But look, so there's a lot to unpack here. Europe has largely neglected their power grid for years, over reliance on or over promising, over hyping of renewable power while neglecting to maintain their existing infrastructure. That could be contributing to a cause here. They haven't ruled out cyber warfare, which is a regular occurrence in Western power grids. So maybe you've got some of that going on. We don't know. But a lot of Europeans are having a lot of problems right now. And this kind of reminds me almost of the 2003 Northeast blackout in the United States. For anybody who went through that, that was a lot of fun. If you may remember, that was actually caused by a software glitch in an alarm system. Failed to notify grid operators that some power lines, some branches were hitting some power lines somewhere, took down one substation. And because the software system wasn't working and wasn't notifying grid operators, they weren't redistributing the load in time. And so one by one, sections of the grid fell like dominoes. Next thing you know, the entire Northeast U.S., as far south as even Atlanta, I think, saw their power go out. So it could be something like that. You could just have like a little glitch in the power grid somewhere, took down one section and the operators for whatever reason didn't respond in time and the dominoes started falling. You could have some kind of cyber warfare, or you could have some major technical breakdown due to neglect. We just don't know. But that's the big one this morning. Also, we're seeing a lot of stories from the logistics world, guys. Alarms and sirens are blaring in the world of logistics. The true pain from this trade war. Again, you talk to the average person on the street. The average person on the street remains blissfully unaware of what's coming. But I can tell you the trade war has hit in 1, 2, 3 specific ways, or at least the first two have already happened. The first one was the bond market. The bond market felt it right away. You had that panic that caused President Trump to back away from some of the more severe rhetoric on April 9th when they carved out certain industries. That was the first reaction, was the oh crap in the bond market. The second reaction, which hit pretty much at the same time, or maybe right after the bond market, was in Chinese factories. The orders stopped coming in, the cargo stopped flowing, and the factories have started shutting down. We got some stories about that this morning. That is already hitting Main Street China, and it's hitting big. Now, the next place that it hits is going to be in the United States on Main Street. All the people that you talk to who are like, oh, yeah, I heard about tariffs and it's probably going to make inflation worse. They have no idea what's coming. Now, later this week, I've got Craig Fuller from FreightWaves coming on the channel to talk about the specifics and some of the data behind that. And if he says what I think he's going to say, it's pretty bad here, guys. Some of this data is pretty alarming. Everything I have read has suggested severe shortages of consumer products will start in May. That's when we start to see it. Most of the U.S. suppliers, they front-loaded their inventory. They stocked up. They filled the warehouse. So they've got enough inventory to last a couple of months. In May, it's going to hit. And everything I'm seeing says it's going to be worse than the shortages that we saw during COVID. How much worse, we don't know. But it looks like it's going to be a lot worse than the COVID shortages. If we continue on this current course, maybe we do, maybe we don't. That kind of sentiment change can shift on the dime out of this administration in Washington these days, so we really don't know what's coming there. Also, tourism is taking a hit. We got some interesting data on tourism this morning. No big surprises. International flights, lot fewer passengers coming into the United States from other countries since the tariff rhetoric has really picked up. Now, we also got some Michigan consumer sentiment on Friday. Consumer sentiment continues to plunge. It actually hit its lowest since July of 2022 on Friday, but that's not the big data point in that Michigan data. It's those Michigan inflation expectations. They are continuing unrestrained to the upside. These are the unanchored inflation expectations that the Fed has been reassuring us for years. Oh, as long as inflation expectations remain well anchored, we should be fine. See also transitory. These don't look very well anchored. Now, a lot of people in this space have been very dismissive of the Michigan consumer inflation data. A lot of people have just cried political influence, and they're dismissing the data outright. And there may be some truth to that because the Federal Reserve's inflation expectation data, it is moving to the upside, but nowhere near the magnitude of the move we're seeing in the Michigan data. So maybe there is a little bit of political influence there, but let's at least entertain the possibility that that's not the cause. Let's at least consider maybe this is legit what the average person thinks is coming. And maybe the average person is a little bit better informed than I give them credit for. Maybe they're seeing some of this logistics data too, and they realize, oh yeah, you better believe this inflation data is going to be that bad when these shortages hit. You better freaking believe it. We'll show you those charts here. These are definitely some unanchored inflation expectations, that big Fed boogeyman that they've been talking about for years. We've got Lending Trees out with a story that says Americans are buying groceries on buy now, pay later. That's a story that's been around for a couple of months, but the number keeps going up. More and more people are buying their groceries on BNPL, and more people are making their payments late, even though the buy now, pay later vendors insist that their delinquency data, that they're only about 2% delinquent on their loans. Convenient for them. They don't report that data, although that could be about to change very soon. More and more of these firms are starting to report to the credit bureaus. But something is up in that buy now, pay later finance space. We've also got some interesting data points. Shout out to my moderator, Mish. You found some pretty good ones today. Secretary Bessent has announced that they will not make any changes to their issuance plans for U.S. Treasuries. In other words, they're going to continue issuing more T-bills than Treasury bonds because of the terming out of debt. Can't do it. You can't do it when interest rates are moving higher. Bessent wanted to do it, but then the trade war took interest rates higher, kind of foiled those plans. We've also got an interesting data point. Cemex, the big Mexican cement maker, showing an 18% year-over-year decline in their earnings and their EBITDA because of lower cement sales. Now, they're saying most of that is due to declines domestically, but I have to wonder, is the Chinese real estate crisis playing a role in that decline in a big cement maker in Mexico? On top of that, we had a deadly port explosion in Iran. Unconfirmed reports that the Chinese were sending them things that go boom, or at least the fuel that goes into things that go boom, and that's what caused the explosion. A lot of people died, a lot of people hurt when that happened. And we even got some earnings from Dominos Pizza this morning, might give us some insight into what's going on with the average consumer. We got a lot to talk about this morning. Why don't we shrink my big melon of a sunburned head? And let's see what is going on in the markets this morning, shall we? Don't forget that like button for the YouTube algorithm while we're here. And you new guys, welcome to the channel. Won't you please hit that subscribe button? Come on back and have your coffee with the melon heads tomorrow morning. And right now, the S&P 500 is actually positive. It just swung positive, up 5 points, 0.1%. Modest gains for stocks this morning. The Dow has also swung to a positive, up 74 points, or 0.18% higher. And the NASDAQ is higher by 14 points, 0.07%. Seems like all three indexes went positive just as soon as I picked the bear thumbnail. They were negative when I posted the stream. DXY, meanwhile, is a little bit stronger this morning, but still below that 100 threshold. 99.6 for the Dixie here, up 13 basis points. And looking over at the bond market, we've got yields are higher this morning, but just barely. No big moves in bonds here. The 30-year Treasury, 4.749. That's up by a point. The 10 years at 4.286. That's up 2 points. The 2 years at 3.764, up a fraction of 1 point. And the 1 month is unchanged, sitting pretty at 4.3 even. Now, speaking of bonds, we got this one. Good find by Mish this morning. Wall Street sees Bessent playing safe on debt after market chaos. Now, guys, just to set the table, Secretary Bessent has been talking about how he wants to term out U.S. government debt. Means he wants to stop issuing the short-term debt, the T-bills, the 1 month, 3 months, and he wants to issue more 10-year, 20-year, 30-year. Now, the goal is to bring down our interest expense, but interest rates aren't really cooperating right now, so he's having trouble with that one. Treasury Secretary Scott Bessent's debt management team is expected to keep the department's plans for sales of longer-dated securities steady, especially after recent swings in the $29 trillion market. Obviously referring to that freak out in the bond market following Liberation Day, despite having criticized his predecessor, Janet Yellen, for tilting U.S. debt towards short-dated treasuries. Bessent, since taking office in January, has said the department is a long way from replacing them with longer-term debt. Accordingly, Wall Street expects no changes in Wednesday's announcement of projected auction sizes for the May to July quarter. So what's going on here is interest rates have risen, and it's hard to term out your debt at a lower interest rate when interest rates are going higher. And so Secretary Bessent is going to keep doing what Yellen did. He's going to keep issuing more treasury bills, at least for the time being. And, meanwhile, Janet's over here just saying, "Welcome to my world, bitch. I am now your mistress, your master, and you will bow to me and issue treasury bills just like I did." Well, Secretary Yellen, that's an unusually coarse tone of voice you're taking with your successor today. But I agree. Bessent is running into the same problem you did. It's tough to issue more of that long-term debt without causing those rates to go higher. Now, looking over at the commodities board this morning, we've got gold is down a little bit here. Spot gold, $3,293. That's down by about $24.40 here. 0.75% lower for gold. Look, metals have had a heck of a run. We're in a pullback here. Nothing too surprising. Spot silver, meanwhile, still holding above $33 at $33.03. That's lower by about 4 cents, 0.13% lower. We've got copper is higher by about 0.25%. Platinum and palladium are both up by 2% and change. And West Texas Intermediate crude oil at $62.85 for June futures. That's down by about 17 cents or 0.25% this morning. Looking over at Bitcoin, Bitcoin's having another good morning here. $95,236 is priced on Coinbase. That's up by about $1,400 from this point yesterday. Worth pointing out here, guys, let's zoom in a little bit here. We came up, we broke above this line. I pointed out this red line a few times that, this was support a couple of times here. Then we broke down. It turned into resistance with these points. Now we have broken back above this line, and it looks like we have retested and bounced off it. So Bitcoin could be heading higher here. If this continues, Bitcoin's behavior over the last couple of weeks has been very interesting to follow. We have seen a little bit of a decoupling from other risk assets. It's been behaving at least somewhat like a reserve at certain times. It's been a noticeable change in Bitcoin. Now, also contributing to this, we have this one this morning. MicroStrategy acquired $1.42 billion worth of Bitcoin from April 21st to April 27th. So it appears that Michael Saylor's infinite money glitch continues to influence Bitcoin's price, no doubt contributing to some of that increase that we saw last week. So that is still a thing. MicroStrategy remains my leading candidate for the blow up that triggers crypto winter this time around. I'm not saying it's definitely going to be them, but I would just say this infinite money glitch, it's going to work right up until it doesn't, and then it's going to be ugly, the unwind of that. Now let's talk about the main story this morning. Spain and Portugal hit by a widespread power blackouts. This is a tough one here. Most of Spain and all of Portugal were hit by a major blackout that impacted public transport, power, and phone lines at around noon on Monday. The government and grid operator Red Electrica are seeking to determine the reason for the outage, according to two statements. Backup plans have been put in place by utilities, the Spanish operator said on X. Portugal's grid operator REN said it's also investigating and that parts of France were also affected. A countrywide blackout is very unusual for any European country, with no event like this in Spain in recent memory. In 2003, Italy saw the worst power cut in more than half a century when a breakdown of electricity lines from neighboring countries impacted the whole country, except for the island of Sardinia. London suffered a major one in 2018. The event on Monday left authorities unable to explain the causes of the outage at least an hour after it occurred. A crisis committee has been set up in Spain to manage the situation, according to people familiar with the situation. At this stage, there's no evidence yet regarding the cause of the massive blackout. A cyber attack has not been ruled out, and investigations are ongoing. So, look, they don't know. This is severe. All of Portugal, most of Spain, and parts of France all in darkness. They don't know. I'm sure we'll hear more about this in the weeks ahead. Now let's turn our attention to the trade war. Once again, guys, pay attention. These alarms in the logistics world, they are getting louder and louder. Chinese factories are stopping production and looking for new markets as U.S. tariffs bite. If you go and look at marine traffic, guys, you're seeing the ships start to pile up at Chinese ports. It's looking an awful lot like LA looked like during the COVID shortage. This is already beginning. Chinese manufacturers are pausing production and turning to new markets as the impact of U.S. tariffs sets in, according to companies and analysts. The lost orders are also hitting jobs. I know several factories that have told half of their employees to go home for a few weeks and stopped most of their production, said Cameron Johnson, Shanghai-based senior partner at consulting firm Tidal Wave Solutions. He said factories are making toys, sporting goods, and low-cost dollar store type goods are the most affected right now. While not yet large scale, it's happening in the key export hubs of Yiwu and Dongguan, and there's concern that it will grow, Johnson said. There is a hope that tariffs will be lowered so orders can resume, but in the meantime, companies are furloughing employees and idling some production. So already hitting Chinese employment here. The impact of the recent doubling in tariffs is way bigger than that of COVID-19 pandemic, said Ash Manga, founder and CEO of Guangzhou-based Imex Sourcing Services, a supply chain management company. He noted that for small businesses with only several $1 million in resources, the sudden increase in tariffs might be unbearable and could put them out of business. So notice that's some pretty alarming language here, way bigger than the impact of COVID on these Chinese assembly lines. And you guys may remember the impact of COVID was they turned them off. So they're saying this is worse. So that's what's happening in China. Now let's flip across the Pacific back to the U.S. Trump's China tariffs set to unleash supply jolt on U.S. economy. We're not feeling it here in the States yet, but you better believe within a few months we will be feeling it here. President Donald Trump's tariff onslaught has roiled Washington and Wall Street for nearly a month. If the trade war persists, the next upheaval will hit much closer to home. Since the U.S. raised levies on China to 145% in April, cargo shipments have plummeted, perhaps by as much as 60%, according to one estimate. That drastic reduction in goods from one of the largest U.S. trading partners hasn't been felt by many Americans yet, but that's about to change. By the middle of May, thousands of companies, big and small, will be needing to replenish inventories. Giant retailers such as Walmart and Target told Trump in a meeting last week that shoppers are likely to see empty shelves and higher prices. Torsten Slok, Apollo Management's chief economist, recently warned of looming COVID-like shortages and significant layoffs in industries spanning trucking, logistics, and retail. Guys, this is coming from Main Street U.S. It's not here yet. It's already hit the bond market. It's starting to hit the Chinese factories. It will hit us last, but it is going to hit us. Prices are going to go higher. Look, the cheap dollar store plastic crap, that's going to be the first stuff to go, but it could also hit more important things. Remember, we get most of our medicines, rare earths. We get a lot of really important stuff from China here. Now, one other place it's hitting is in tourism. All right, Spencer Hakimian put this one out this morning on X. U.S. airports are welcoming fewer international tourists. Some 4.5 million visitors arrived last month, down 9.7% from March of 2024. Now, one important thing to note here, guys, this is March data. This doesn't include the after effects of Liberation Day. So as we're going through and looking at all these charts and looking at these declines, understand it's probably gotten a lot worse in the last month. We just don't see it in the data yet. Look at the arrivals from Canada here, down almost 10% year over year. The arrivals from Mexico down almost 20% year over year. All right, this is tourism now. So obviously big declines there. There was a lot of rhetoric in March, especially aimed at Mexico and Canada. So I'm not too surprised to see that. Scrolling down a little bit, we saw Europe plunging down about 15% year over year. And again, this is all pre-Liberation Day data. Now, the interesting thing, Asia. Now, yes, this chart has been in decline, but arrivals from Asia were virtually flat, at least in March. Now, obviously, this is going to be way, way down following Liberation Day. The point here is, guys, tourism taking a big hit in the U.S. here. Pay attention. Hotel stocks, Disney, theme parks, all going to get hit from this one. And it's probably going to hit fuel consumption as well, hence the lower oil prices that we've seen since Liberation Day. Now, meanwhile, let's check out this Michigan data. This is the Michigan Consumer Sentiment Index, and it dropped to 52.2 for April. That's down from 57 in March, 64.7 in February. We had seen a little bit of a bump following the election day. There was a little bit of that Trump enthusiasm. And ever since the tariff talk has picked up, we've seen this decline pretty significantly. If we zoom out on this chart, you can see we are the lowest we've been in Michigan consumer sentiment since July of 2022. In July of 2022, that was in the midst of the big tech layoffs, the recession that wasn't, remember the recession that they tried to define their way out of in 2022? Arguably, it's still going on now. This is the worst consumer sentiment has been since then. But the real thing with this Michigan data is the inflation expectations. Look at 1 year inflation expectations here, now sitting at 6.5%. Up sharply from 5% in March, which was up sharply from 4.3 in February and 3.3 in January, 2.8 in December. Guys, inflation expectations, this is the very embodiment of unanchored inflation expectations. And look at what a 10-year chart of this looks like. We are now well above even the peak that we saw in April of 2022 at 5.4%. And this line has gone vertical, and it shows no sign of slowing. Rather, it's accelerating to the upside. Again, a lot of people are being very dismissive of this data point. Even if there's political influence here, I doubt it's affecting it this much. And in the data, you can see it. Yes, Democrats are overtly pessimistic about inflation, but the independents are there with them. And even Republicans are starting to see increased inflation expectations. Don't be so quick to dismiss this data. And of course, the 5-year inflation expectations, we're seeing the same thing, 4.4%, up from 4.1, before that 3.5, before that 3.2. So the 5-year inflation expectations are rising significantly. And when we zoom out to a 10-year chart, this is a hockey stick curve here. This really paints a worrying picture. Even at the worst of it in 2022, 5-year inflation expectations were 3.1%. John Q. Public was buying that transitory malarkey back then. And well, now we're even worse, 4.4%. So guys, the average person thinks inflation is getting worse. And remember, this can be a self-fulfilling prophecy. If the average person changes his consumption patterns in order to front run inflation, he can make those prices go higher if enough people start doing that. Meanwhile, people are still suffering from the last bout of inflation. More Americans are financing groceries with buy now, pay later loans, and more are paying those bills late, the survey shows. And look, this is one of those things that for the last 2 years, we've been pointing this kind of stuff out. And the mainstream financial press has been saying, oh, it's the best economy ever. Your problem is your bad vibes. You're just so blinded by politics. You can't see how good the economy is. And well, how's that going for you? All of a sudden, certain things change politically. And now all of a sudden, oh, okay, now let's pay attention to what the economy is really telling us. And people buying groceries on buy now, pay later, financing food, not such a good indicator. A growing number of Americans are using buy now, pay later loans to buy groceries, and more people are paying those bills late, according to new LendingTree data released on Friday. The figures are the latest indicator that some consumers are cracking under the pressure of an uncertain economy and are having trouble affording essentials such as groceries as they contend with persistent inflation, high interest rates, and concerns about tariffs. Again, guys, this is nothing new. This has been going on for years. It's been getting steadily worse, and that, of course, is continuing today. In a survey conducted in April, 2,000 U.S. consumers aged 18 to 79, around half of them reported having used buy now, pay later services. Of those, 25% of respondents said they were using buy now, pay later loans to buy groceries. That's up from 14% in 2024 and 21% in 2023. Meanwhile, 41% of respondents say they made a late payment on a BNPL loan in the past year. That's up from 34% in the prior year, the survey found. And that's the thing here. 41% of respondents are saying they made a late payment, and yet companies like Affirm are telling us our delinquency rates are only 2%, 2.5%, roughly a third of what subprime delinquency rates are anywhere else in the debt world. It defies reality. And, well, they don't have to report their data, so I guess we just have to take their word for it. And remember, they are also securitizing this debt. They're packaging it up into bonds and selling it to ETFs and pension funds. What's the worst thing that could happen? Don't answer that. Stop me if you've heard this one before. Meanwhile, we got some more data out of Mexico. Cemex profit plunges on lower sales volumes in the U.S. and Mexico. And something tells me China is playing a role here as well. Mexican cement maker Cemex reported declining profit amid lower sales volumes, especially in its home market. Operating EBITDA, a measure of profitability that excludes items such as taxes and depreciation, dropped by 18% to $601 million in the first quarter. Analysts had anticipated a difficult period, but the number was below even those estimates. So cement maker making less money. That's less spending on infrastructure, less construction spending. Absolutely a factor here. And, look, how many empty promises do we get about, we're going to invest in infrastructure, and we're going to pass this big bill, and we're going to fix the roads and the bridges. And somehow the roads and bridges never end up fixed, and all the money ends up going to special interests. But on top of this, for the last 20 years or so, more than half of the world's concrete has been poured in China. Now, China isn't mentioned anywhere in this article, so maybe I'm wrong about this one, but I'm having a hard time believing a collapse in construction spending and real estate in a market that has consumed more than half of all the concrete for the last 20 years isn't somehow responsible for a decline in sales in Mexico. Call me crazy, but I think the Chinese story is having an effect here. Meanwhile, we had a major explosion at a port in Iran on Friday. This was a big one. A lot of people got hurt. Iran tight-lipped on cause of deadly port explosion that killed at least 40 people and also injured about 1,000. This was something went boom. Something big went boom here. Iranian authorities have not said what caused the massive explosion at the port of Bandar Abbas on Saturday, killing at least 40 people amid unconfirmed reports of possible presence of a chemical used to make missile propellant. Eyewitness accounts and video indicate chemicals in an area of shipping containers caught fire, setting off a much larger explosion. The death toll has spiked sharply, with 1,000 others reportedly injured, according to the Associated Press, citing Iranian state TV. Of those wounded, 190 remain in the hospital. One surveillance video distributed by the Fars news agency shows a small fire beginning among containers, with a number of workers moving away from the scene before a huge explosion ends the video feed. Emergency workers hoped the blaze would be fully extinguished by Sunday afternoon after aircraft doused the site with seawater. About 80% of the fires have been contained, Iranian state media reports. These fires are still burning. It's really hard to put out a smoldering cargo container. You can pour water on it, but it's a cargo container. It has a roof. The water's just gonna cascade off of it. You got to open the thing up and squirt inside. And this is not an easy fire to contain. Now, the one thing I would point out here, guys, unconfirmed reports that the possible presence of a chemical used to make missile propellant. Remember, guys, the Iranians are the chief suppliers of all of these missiles, drones, rockets, all the things that go boom, that Hamas have been lobbing at Israel, that the Houthis have been throwing at ships. It all comes through Iran via China. So maybe this was an accident, or maybe not. Maybe this was an intelligence operation. Maybe somebody put something on. I'm just speculating here. Maybe I shouldn't speculate. But look, when you ship stuff that goes boom all over the world to terrorist organizations, sooner or later, something like this is going to happen. I would just add those are unconfirmed reports of chemicals used to make missile propellant. And last but not least, let's talk about Domino's Pizza. Domino's U.S. same-store sales slip as a cooling economy chills pizza makers' profit. The pizza makers' international business provides a lift to results, but its stock falls in pre-market trading. Domino's Pizza fell 2.2% in pre-market trading on Monday after the pizza chain's first quarter profit and revenue fell short of projections, due partly to a slower economy. Domino's U.S. same-store sales in stores open at least a year declined to 0.5%, compared with a jump of 5.6% in the year-ago quarter, adjusted for currency. International same-store sales increased by 3.7% ahead of the year-ago growth of 0.9%. Domino's also operated 8 fewer stores in the quarter after it opened 17 U.S. stores and closed 25 international. So you got a 0.5% decline in same-store sales here in Domino's. I'm sure struggling consumers playing a role there. Also, it's possible GLP-1s playing a role there. Ozempic effect, right? A lot of people are taking this stuff, and a lot of people are eating a lot less junk food. We're seeing it in Coke and Pepsi earnings as well. So maybe that's playing a role here. Right now, though, Domino's Pizza, the opening bell has rung, and Domino's is down just under 2%, $478.11 for Domino's Pizza. And I just want to say thank you very much to Mr. Armando Reyes, who says, they say that the UK wants to dim the sun. That's a wonderful idea. Yeah, I've seen The Matrix. Didn't go so well for humanity. So, guys, a lot of times these dystopian sci-fi films are meant as a warning to humanity to not be so vain and so arrogant and so quick to judge and make silly decisions without fully understanding the long-term consequences. I'm just going to throw it out here. Maybe blocking out the sun is a bad idea. All right. Maybe the people who say you can't build a house because there's an endangered nematode that lives in that region, maybe they shouldn't go block out the sun until we've done a thorough environmental impact study. All right. Yeah, I agree, Armando. Not the best idea. All right. 2020's bingo. Do we need to do this? Do we need to put the tinfoil hat on my sunburned melon this morning? Do not block out the sun, England. Pretty please. Signed, everyone on planet Earth. Meanwhile, thanks again, Armando, for the super chat. Meanwhile, Bart Stapleton, thank you for being a melon head for 14 months. He says, always a great show, Jack. I love the tinfoil hat. Well, as a matter of fact, Bart, I just donned the tinfoil hat. So thank you for the good vibes this morning, sir. I appreciate that very much. Armando's back. He says homelessness is going to skyrocket once they start garnishing wages to collect college debt. It's certainly not going to help with homelessness. Is it going to skyrocket homelessness? The homelessness rate is already skyrocketed. It's definitely going to contribute, right? You got a lot of people who have been living artificially inflated lifestyles. And I know some people are going to react strongly to that statement. But look, your cost of living went up 20 to 30%. And you didn't feel it all because the government said you don't have to pay this big bill while that's happening. Well, you should have known that was coming back, right? There's been plenty of talk, plenty of warning that this is coming back. And, look, were you lied to about the value of your college degree? Yup, absolutely. Is the job market not as good as it was when you went into college? Yup, absolutely. Are you the first generation to have it worse than your parents? Yup, absolutely. Do you have a right to shift the burden of your college debt onto your counterparts who didn't go to college? Nope, no way. It sucks, but it's coming back. Is it going to skyrocket homelessness? Maybe that's a bit extreme. It's certainly going to take another chunk out of consumer spending. It's going to take a chunk out of tourism. And it's going to put downward pressure on rents also. Homelessness, geez, that's a problem that's bad enough. Thank you very much, Armando, for supporting the channel. El Palestino, thank you, sir, for supporting the channel. He says, I spent $15,000 buying physical gold and silver using Klarna, buy now, pay later. That's a bold strategy, Cotton. Let's see if it pays off to him. It's amazing service, and I can confirm that it is not reported to the credit bureaus. Wow. What stage? What stage are we at, El Palestino? Now, this is zero interest, isn't it? Or what's the interest like on that? I'm wondering. I mean, you're basically buying gold on margin here. So be careful. A big sudden drop in the gold price is going to leave you with the debt on an asset that you can't liquidate to cover the cost. So keep in mind, maybe don't go too far out on that limb. The price of gold is elevated substantially. Yeah, and Klarna, by the way, Klarna had to pull their IPO, guys. That's another indicator that things in the economy not going so well. The private equity market, private equity has big problems here. Venture capital has big problems. They cannot sell the companies they invested in because the IPO market is dead. The CoreWeave IPO was a disaster, and Klarna saw what happened there and then saw the trade war coming and said, we're just not going to IPO at all. So there's a lot of private equity companies are stuck holding assets that are not worth what they claim they are. Hey, Pigos Trading Desk says, I need some leather yelling for the crisis. Well, we already did talk about my girl Janet earlier when we were talking about Secretary Bessent, Pigo. So I will defer to my earlier comments about Secretary Bessent being unable to term out the U.S. debt. By the way, Pigos Trading Desk, I actually went over to his channel on Friday night. We had a nice long talk with the guys over there, with Tony and Derek. Great bunch of guys. Had a good time talking to you guys. A lot about the trade war and the geopolitical implications of it. So go head over to Pigos Trading Desk on YouTube and check that one out as well. And Pigo, thank you so much for supporting the channel. I don't know if that's Tony or Derek there, but thank you both of you guys, whoever that was. Armando's back, and he says, I know that this isn't a popular idea, but higher unemployment will bring down reckless spending and hopefully bring down inflation. Yes, that is a fact. Higher unemployment does bring down inflation, but it brings down inflation in a pretty terrible way, right? It's people aren't spending money because people don't have any money to spend. It's a painful way to achieve lower inflation. Unfortunately, that's the Fed's method of choice, right? The Fed prints money, they make Wall Street insanely wealthy, and then in order to offset the consumer inflation they punish Main Street, who didn't participate in the gains from the ballooning asset prices. So that is typically how it does. I'm just a big fan of just stop bailing out Wall Street. Stop the monetary expansion and the monetary debasement. And by the way, have you guys looked at M2 money supply? The money supply has been growing this whole freaking time. The Fed has been telling us they're doing quantitative tightening. They have been, but the money supply is still growing. Wall Street is still pumping money into existence, but they're doing it with broad money instead of the Fed doing it with reserves, which is even worse. That means Wall Street is moving further out on the limb while the Fed is cutting into the branch. You don't have to be a mechanical engineer to understand what's going to happen eventually if that keeps up. Thanks again, Armando, for supporting the channel. Break My Wallet Motorsport says the Janet cameo made coffee come out of my nose. Mission accomplished. Get some. All right. You know, I wake up every morning and I say to myself, how am I going to make that coffee projectile out of Break My Wallet Motorsport's nose this morning? Well, today we hit that bullseye. Appreciate the good vibes, Break My Wallet. Sorry about the mess. I hope I didn't ruin your phone and or keyboard, sir. And I've got Ian Ross says, we need more sun in the UK, not less. Yeah, get a little sunshine, a little vitamin D, you got to get a little D going. Blotting out the sun. I feel like I need to mention that again. Please do not blot out the sun 2020s. Man, that bingo card is already packed full of murder hornets and all that other stuff. We don't need blotting out the sun. Thank you, Ian Ross, for being a Melonhead for 7 months. Pigo is back again, says BNPL, Temu, and shrinkage looming. I saw an article in Bloomberg this morning, and they're starting to say, like, Americans suffering price increases on Temu due to Trump tariffs. Who the hell is, honestly, who is suffering from price increases on Temu? Temu is garbage. It is plastic crap that you're lucky if it works out of the box. Oh my God, the horror. The stuff on Temu and Shine got more expensive. My Wish.com, whatever the heck, isn't gonna be so cheap anymore. Guys, like I bought one of these cheap freaking chess clocks for me and my daughter. We like to play chess. The thing's not even 6 months old and it's freaking broken already. It just doesn't work. You hit the button and the counter just stops instead of changing it over. Like, this crap doesn't save us any money. If you're buying something and it breaks in 2 months and then you got to buy it again, it's not cheaper. It's twice as expensive because you have to buy it twice. Maybe, just maybe, we don't need this Temu, Shine, Wish.com crap. Maybe we can make something in America, pay twice as much, but have it last 3 times as long and eventually be better for it. I just throw it out there. You guys do what you want with them. Thank you, Pigo, again, for supporting the channel. Derek and Tony, you guys rock. Brett Stapleton, thank you, sir. He says BNPL, commercial real estate, property taxes, car market, residential real estate, AI bubble. Oh my. Are the tariffs a convenient scapegoat for what's happening to the U.S. economy? Yes, but the tariffs, in my opinion, are the pin that is popping the bubble that is all of those things you listed. All right. So I do think there's going to be a very strong tendency in the press to call it the Trump recession, the Trump session. You already see it in Bloomberg. You never see the trade war or the effects of tariffs. Everything is written Trump's trade war too. Trump's trade war pressures Americans. Trump's tariffs put strain on middle class, right? They're very quick to brand all the pain, the Trump pain. That is the existing political disposition of the financial press, all right? That's nothing new. That being said, Trump is not innocent in this, all right? Trump is the pin that is popping this bubble via the tariffs, and so he is deserving of much of this blame since he is the initiating event. That being said, the underlying weakness that is going to make the pain from that so much worse, that has been there all along. Much of that was made worse by Biden's policies, Trump's policies before that, Obama's before that, all the way back to freaking Nixon. So they all deserve the blame for it. Trump's probably going to get most of it. There's going to be a lot of pressure in the press because they all hate him. And, look, he makes himself a bullseye for it with his unusually brash language and his conduct unbecoming. And so he's an easy target for that. But this is a comeuppance that is long due the U.S. economy. Decades of irresponsible behavior by this country. And to blame it all on one specific policy is dishonest, I think. Thank you very much, Bart, for supporting the channel. And thank you, Viv B, for gifting 5 Nobody Special Finance memberships. Thank you so much, Viv, for supporting the channel. Welcome to those 5 new melon heads. Be sure and say thank you to Viv for that. And just a reminder, you guys, any of you melon heads, you get one of these super chats. I believe it's one a month. So feel free to use that, and I will read your question or comment on the air. Lisa B, 14 months as a melon head. Thank you, Lisa. Says they will sell to pension plans. No worries. Lisa, I meant to reply to that email you sent me. I did see that, and I did watch that video. It was on Thoughtful Money with Adam Taggart, and there was Steph Pomboy was in that video, and there was a third guy, an attorney. His name escapes me, but there was some really alarming rhetoric in that, and it's a lot of the things I've suspected on my channel for a while, that pensions are being used as the parking lot for the worthless crap, for all of Wall Street's sludge. Before they allow price discovery, they're going to park that garbage in pension funds. And that is exactly what private credit is doing now, since they can't dump it on retail investors in the stock market. The IPO market is dead. They're going to park that crap in pensions. Thank you for sending that, Lisa. And I agree, they will sell all this crap to pension plans. What's the worst thing that could happen? Don't answer that. 2020s. Pigo is back again. Import fees hitting hard on Temu and Shine and BNPL. Now, the import fees, are we talking tariffs is one thing, right? The tax on imports, but there's also a separate fee of several $1 million I'm seeing that's being placed on Chinese-made ships. Not just tariffs, not just a tax on the cargo, but the ship, wherever the ship was built. There is now an additional fee is being placed on Chinese-manufactured ships. That's all about trying to revamp American shipbuilding. That's a whole other story entirely. Now, here's the thing, guys. Chinese shipbuilding is bigger than the United States. It's not twice as big. It's not 3 times as big. It is about 230 times as big as American shipbuilding capacity. For every boat the U.S. puts in the water, China puts 230 in the water. Now imagine what a prolonged naval conflict between those two countries looks like. I don't care how good our ships are, and they are good. We better learn how to build those freaking things real fast, real freaking fast. And the import fees that are hitting Shine and Temu are partially, that's what they're aimed at fixing. Thanks again, Pigo, who's back again, member for 1 month. He says, imagine BNPL, but 72-month financing. Sure, we got 40-year mortgages now. How about a 40-year mortgage on DoorDash? Why not? I can let my grandkids pay for my wonton and my egg rolls. Sure, that's responsible. It's a very 2020s thing to do. Thanks again, Pigo, for everything. And P-Nice is back. He said, Ted Seidel. Okay, Ted Seidel was the name of the attorney. Thank you. He was the name of the attorney that was in that video with Steph Pomboy on Adam Taggart's channel, Thoughtful Money, which is an awesome channel, by the way. I highly recommend Thoughtful Money. I was listening to that yesterday while I was on the mower getting this big sunburn on my melon of a head. That was a really, really good interview. So thank you, P-Nice, for the clarity. Thanks again, Lisa, for sending that. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate the generosity in the super chats. You guys are awesome, as well as you magnanimous Melonheads on Patreon and YouTube. Thank you guys for all the support of the channel. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.